We have reached a permanently high plateau. That was 1929, days before the biggest stock market crash in history leading into the Great Depression. There have been no worse market calls than from the world's leading economist at the time, but up until that point, he was praised for being extremely bullish. He was a hero, not quite to the same degree as Helicopter Ben after the financial crisis, but certainly his words were celebrated. Today we have the same call from the biggest hedge fund in the world. The echoes of 1929 reverberate loudly even a century later. You came here for the truth, so let me unveil that for you. Today we're going to look at what's been happening at Bridgewater, what they had to say. We're going to look at the Federal Reserve, of course, show you the balance sheet, give you some updates on what has been going on. I'm going to give you economic data, looking at the ISM, looking at what's going on in China as well. I've got a lot to cover. I think I have something like 25 tabs open right now. It's going to be intense. Let's get into it right away. Back in 1929, Irving Fisher, top economist, he had this to say: stock prices have reached what looks like a permanently high plateau. Days later, stocks start going down, down, down. You couldn't have been more wrong. Well, today we now have the biggest hedge fund in the world. You might know Ray Dalio is from Bridgewater. Well, the co-CIO of Bridgewater, Bob Prince, said that the boom-bust cycle is over. And this couldn't be further from the truth. We've heard about this before, and it is no different than what was stated back in 1929. The tightening of central banks all around the world wasn't intended to cause the downturn, wasn't intended to cause what it did. But I think lessons were learned from that, and I think it was really a marker that we've probably seen the end of the boom-bust cycle. Now you got to think about this for a second here. He is suggesting that what central banks are doing by bringing the interest rates down and by pumping up the balance sheets has created the end of that boom-bust cycle. And this is not true because, of course, they created this in the first place. They do so by bringing interest rates down and by pumping up their balance sheets. They've done it in all different ways. They could do it through the repo market, pumping it up, trying to buy those short-term debt. They can do it with long-term debt. They can do Operation Twist. They can reduce interest rates, bringing it to zero, or they can do so in the negative. They can bring them very low like they are today, but ultimately every action that they take is creating booms and busts. Their very nature is creating this system and making it worse every single day. Every day they intervene, they're going to make the problem worse down the road. And unfortunately, this is simply propaganda. Now, of course, Bridgewater is a company that manages a lot of money, and of course, they need to keep their clients happy, subdued, and docile. This is what they're doing. They're trying to calm the market down, knowing that there's so much influence surrounding this company. We have to pay attention to that and be aware of what is real and what is propaganda. I think it was only a few days ago where you had the co-chief of Bridgewater, Greg Jensen, stating that now we're seeing a lot of froth in the markets, looking a little risky out there. You got the geopolitical tensions. Looks like gold can rise as a result of that. He's giving a very different view. Then you have Ray Dalio coming out and saying a few things. I talked about it yesterday. Something's really going on at this company, and they have to synchronize with each other. And of course, it's good to have opposing views, but something really unusual is happening here, and I do believe it depends on the data you're looking at. PwC's annual global CEO survey revealed a record level of optimism regarding worldwide economic growth back in 2018. However, this year, as CEOs look ahead into 2020, we see record level pessimism. Now, why would that be the case? We're being told by all of these money managers out there, by the mainstream media, the Federal Reserve, everybody top to bottom, that this is going to be the best year that we've ever had. GDP is going to grow at a fantastic level. You don't have to worry about a crisis or a recession. Well, only 27% of CEOs are very confident in their prospects for revenue growth in 2020, a low level not seen since 2009. That's right, 2009. So we're going to see what actually happens, but of course, this information is all based on what they believe. This is not necessarily propaganda. If it was, we'd probably see a high number every single year. Right now, pessimism at a level we haven't seen since 2009. Very interesting to say the least. Doesn't really give us anything, but just one more data point to add on. The balance sheet of the Federal Reserve has been expanding dramatically. I've been covering this, of course, and you could see on this chart what it has done, heading towards $4.2 trillion. This information will be updated as of tomorrow. I will try to include that in tomorrow's video. Just wanted to lead into what I'm going to show you next. You could see the cumulative Fed liquidity, and of course, this is broken down by all the different operations that they are doing since September. They've been adding to this. A lot of people don't want to talk about it anymore because it's old news to them. However, it's still happening every single day. Today, just in the overnight operations, it was $50 billion. They continue to do this. It continues to be a problem, and I will continue to cover it. At least just make a mention of it because it is really important. This is a chart that I've shown you multiple times before from Bank of America. What we're looking at here is that in every major market shock since the 2013 taper tantrum, central banks have stepped in, even if verbally, to protect the markets. You can see all the examples. This goes back from January 2013 until 2017. All I needed to show you from this was the example after example after example. And the same thing happens today. Looking at the S&P 500 technology stocks, 14-week RSI, the relative strength index, going back to levels we have not seen since 1990s. This is how you know things have gotten overblown. On so many different indicators, we are seeing the extreme levels, and nothing is stopping this at this point. There doesn't seem to be any roadblocks, any obstructions along the way from here to the moon. Equity net future positioning of asset managers and hedge funds has spiked. The lighter blue line is US equity and the darker is the global equity, and either way you look at it, this has been going up like crazy, exceeding what we had seen back at the beginning of 2018. The top line is the S&P 500. The bottom is the call buy to open volume as a percentage of the NYSE volume, just showing you that speculation has risen. That's all I'm trying to get into. And then we have Tesla becoming the world's most valuable car company. I want to know what you think about this. Of course, I think it's just something to marvel at, just something to behold. Tesla right here crossing that $100 billion mark, exceeding Volkswagen, exceeding these companies that have been around a long time. We've seen their growth over the years. We've seen their struggles too. A lot of these companies have been laying people off. We've seen the ups and downs. I've been covering the auto recession that's happening right now. On the other hand, you're seeing Tesla stock exceeding $100 billion. It's being treated more like a tech stock than it is an automotive stock. There's a lot of bad news coming out of the company. There's also a lot of good news coming out of the company, but clearly what's happening right now is there's a short squeeze, and that is pushing this higher in the short term. We'll see what happens in the next little while. The Chicago Fed National Activity Index, directly from their website. I pulled this report and you can see that it fell to minus 0.35 in December. Yet another indicator to pile on. There are so many that are showing weakness, whether we're looking at the PMIs, whether we're looking at manufacturing in general, freight, and so many others that I've given you that breakdown of, and it's always looking weak, except when we look at data, for example, equity prices. Well, sure, that's doing very good. In fact, we are now seeing a resurgence in some of the real estate markets that were weak previously have now started to turn around. And why is this the case? Well, of course, we are seeing interest rates at rock bottom. That forces people to put their money into riskier and riskier bets, to take on more and more leverage, and you know the drill. This is just a chart form comparing the S&P 500, which has been rocketing higher, to the Chicago Fed National Activity Index, which has been up and down, but the general trend here since around the beginning of 2018, falling further and further, just like so many other indicators I have shown you. This is the ISM directly from their own website. I always like to give you the data directly from the source. You could see the ISM PMI at 47.2, GDP growing at 1.3%. This information is very different from what they're going to tell you about on CNBC, but I guess they don't really give a damn anyway. Many of China's provinces cut the 2020 GDP growth targets despite easing trade tensions, and yet it's still happening. Why? We're being told everything is fine. Why would this be the case? Well, of course, we always hear about this type of information after the fact. They pump out the number, it's 6.1% or 6%, whatever it's going to be, and later on we get revisions. Later on we get to hear about all the bad news, but by then the market doesn't care about it anymore, so it's all good. You can take a look at two of the stats on here. China's electricity consumption as well as the manufacturing PMI. Both of these have moved downward. China's credit impulse, the amount of money being pumped in, being loaned out in the short term, let's say through 2019, that has been coming up, but it's still down from the peak experience back in 2016. So I want to see where that goes because they have reduced their restrictions. They have been becoming more relaxed, trying to get this economy to continue and move, but it's really starting to hemorrhage badly. I'll keep you up to date with that. Really quickly, Pentagon racks up $35 trillion in accounting changes in 1 year. Clearly, this is a very big problem. I covered it in the community or blog section of my channel. Just want everybody to know about this. I think it's really, really crucial to understand what they do with your money. Now, here they're saying there was no fraud at all. Don't worry about it. Everything's totally fine. But it's a joke. That's what it comes down to. It's a joke. They can print as much money as they want. They can use the money anywhere that they want, and the Congress is nothing but ceremonial at this point. Nobody cares. See the proposed plans for underground sleeping pods in San Francisco. This is your future. This is the future of your children, your grandchildren. They're sleeping in pods. My goodness, they're sleeping in pods. They call them pods, but it's a box underground. I mean, that's a coffin. I can't even believe I'm reading this. Nearly 4 in 10 Americans would borrow money to cover a $1,000 emergency. This is something that I have shown you in different areas, talking about different factors. Basically, that the average person cannot afford their life. And it's not as if they live lavish lives, most of these people. I'm sure there are people who spend too much money. They don't need the newest iPhone. They don't need the newest vehicle, but they do get it anyway. But in general, people are pushed to the absolute edge. We have a crisis on our hands, they're going to be wiped out. That's all for this video. If you found that informative, hit that thumbs up button. Simply by clicking one button, you support my work. Thank you very much. If you want to learn about e-commerce for free, absolutely for free, step by step, check it out at the AmazonGPS.com. If you want to know about the financial system, you want to actually learn about the foundational principles, the history, the asset classes, how to actually make money, these two books have everything you need. Check them out at the link in the description. The audiobook is at themoneygps.com. You want the how-to and the solutions? Well, I've got a playlist called, guess what? How to and Solutions. Click on it right here, and I'll see you there.